All right, what's going on, guys? Tremaine here. Another market review, Thursday, August 15th, 2024. Let's get it. So focusing on this candle here, this is Thursday's trading. As you can see, pretty nice buy day, pretty volatile. What is this? Roughly about 500 handles or so. That's a lot. So in the Discord, I sent out this buy side as a drawn liquidity for me. We just missed it with today's trading, so I'm expecting Friday to tag that. We also have a rejection block, which is the closing price on this up close candle, and a old new day opening gap. So the separation between this candle's close and that candle's open is a new day opening gap. You could draw that on your chart. Remember to have your chart settings have this turned off. Color bars based on previous close. Make sure to turn that off, and you'll be able to draw your new day opening gaps simply from the separation in between the close and the open on your daily chart. All right. So let's drop down to a 15-minute, get a little bit more insight here. So we did have high impact news at 8:30, which is this candle here. SMT with ES. If you load your ES chart, you'll notice that at this same point in time, S&P made a lower low, and the Nasdaq and Dow failed to make a lower low. So we have SMT there, rally, fair value gap, trade down into it there, and then we get our news driver at 8:30. All occurring beneath that midnight open. Okay, best opportunities to go long beneath, at, or just above that midnight opening price. 8:30 news driver comes out, off to the races. Fair value gap here. Okay, we do drop into it just by a few ticks. That's institutional order flow entry drill. Okay, signs of bullish order flow, leaving this fair value gap open. Pretty much leaving this fair value gap open. 15-minute chart here, leaving this fair value gap open. Okay, that's signs of bullish order flow, and slowly making our way up into that new day opening gap. And that daily buy side level is right there. So I'll definitely be looking for that to get tagged either during London or New York session on Friday. All right, so let's drop down to a 5-minute. It's pretty simple price action today, just going higher, going higher. Breakaway gap formed at 8:30. Okay, the fact that this stays open and doesn't get traded to, that signs a bullish order flow going into our 10 o'clock to 11 o'clock silver bullet hour. Fair value gap, signs of bullish order flow. How? We're leaving the lower half open. Okay, that's bullish, working in the top half. Look at the bodies, respecting the high of the fair value gap. We rally. Small fair value gap here. Signs of bullish order flow. How? We're leaving it open. Not even willing to come down to the bullish order block. Working the fair value gap here, body staying above consequent encroachment. This candle opens, trades down perfectly to the low of the fair value gap, unwilling to come down to this one here. Rally. Down close candle, 2 consecutive down close candles, opening price all the way up to the high. That's the sensitive part of the order block, draw it through. Offer support here. Rally, down close candle, order block, rally, down close candle, coupled with the fair value gap. Come down during lunch, taking out a short-term low, trading into the order block, fair value gap, and then reaching our old new day opening gap. All right, I'll leave it right here for just a second. All right, 1-minute chart. A little bit more lipstick on here. 10 o'clock to 11 o'clock silver bullet hour. All right, we open at 10 a.m. here, drop down, that's a Judas swing, into what? Bullish order block, last down close candle prior to this displacement is your order block. Take the closing price all the way, not the close, the opening price all the way up to the high, draw it through. You can see us working that level there. Rally up, fair value gap, look at the bodies respecting consequent encroachment. In the live stream and Discord, I wasn't interested in taking anything long today. Just us being, I don't have it on here. But let's see. Our midnight opening price is roughly about right here. And I wasn't interested in chasing anything going higher. Okay, so we just watched this pan out in the live stream. We actually ended the live stream early. I wasn't interested in any of this. But fair value gap, fair value gap, fair value gap, all underneath the 10 a.m. open. Okay, think of power of 3. Then sloppy, messy, we get to 1050, 1110, macro, retracement, perfectly normal, taking out a short-term low, fair value gap in here, and then we work higher as we head into the lunch hour. Now we get to the lunch hour. Remember, we talk about this pretty much every day at this point. If we're looking for buy side up here, all right, or the rejection block / new day opening gap up here. So we're expecting higher prices going in to the lunch hour. What do we want to see if we're looking for higher prices? We want to see some kind of short-term low taken out. Okay, we want to see a run on sell stops. Think about it. Who's been making money all day? People going long, right? This low here hasn't been taken out. This low hasn't been taken out. This low, equal lows here, this low here, this low here, this low. So traders who made money all morning are just trailing their stop losses up. This low here, this low, this low, this low, this low. Now we're in the lunch hour. If we're expecting higher prices, we don't want to see the algorithm allow people who made money all morning to just continue riding that move going higher. So if you're looking to go long during lunch, if you like to trade the lunch hour, if you're bullish, you want to see a short-term low taken out first and then look for your entry to ride the continuation higher. Sell side taken out. We open at 12 p.m. here. Draw the opening price all the way through. Best buying opportunities are below that opening price. Sell side, drop down. This sets the stage for us to go higher. We consolidate. It's choppy in here. I had this fair value gap drawn all the way through. That's an inversion fair value gap. Okay, consolidate. It's choppy, messy in here. Look at the bodies respecting the low of the inversion fair value gap. Displace, come back. Look at the bodies respecting the high. Down close candle here, bullish order block. This candle right there. Opening price all the way to the wick, draw it through. Bullish order block, the body stopping at the high of the inversion fair value gap. Rally once more, come back down. There's a small fair value gap here. Down close candle, bullish order block. We get some nice displacement. Come back down, fair value gap, bullish order block, clearing out the buy side, but where are we going specifically? Into that old new day opening gap. We're not going to worry about the PM silver bullet hour, 2 o'clock to 3 o'clock, choppy, messy in here. Final hour macro. Now, if you look right here, I did take this trade on paper and sent into the Discord. All right. When it comes to the final hour macro, its function is to attack remaining liquidity still left on the table. So as you approach 315, you should be looking back. Where is the liquidity? Well, if we had this consolidation here that occurred the past hour, where's the liquidity? It's going to be resting above the buy side, okay, above the consolidation. And we have liquidity resting on the sell side below the consolidation. Because as this thing is just going sideways, up and down, up and down, up and down. People are placing their buy limits. Breakout traders are looking to break out going long, and people are placing sell limits underneath the consolidation to go short. So as we approach that final hour macro, okay, it's going to seek liquidity that's still left on the table. I'm going to take this off just for a second. We rally up, clearing out the buy side. At this point in time here, where is the liquidity remaining? We still have time left in the day until the close at 4 p.m., and the final hour macro is from 3:15 to 3:45. We run out the buy side at about 3:35. Where's the liquidity? Well, breakout traders looking to go short on this breakout here. Stop losses are resting below that sell side liquidity. After we clear the buy side, we also have this side here, trade down, run up against it one more time. So we've definitely ran buy stops, break down. First fair value gap is a breakaway gap. Fair value gap here, that's your entry, targeting the sell side. And then I used projections for targeting. Take this high all the way to that low, project it through, -1, okay, measured move, target, that's fine, but that wasn't enough range for profit taking. So I targeted the -1.5 standard deviation, got my sell limit there, and then I was done for the day. On paper. We rally up and consolidate in between the range, that high and that low, consolidating near equilibrium as we head into the close. All right, and that's it. Paid members, I'll see you guys in the Discord tomorrow at 9:30 a.m. And remember, we also have that webinar Saturday at 10 a.m., okay, New York time. So I'll see you all then. Everyone else, peace.